Hello traders, welcome back to the channel. This is Jonah with Trading the Charts Pro. And guys, in this video, we are here to break down the overall market direction and just look at the indices to see what exactly is going on. Today was a pretty good day, based on what the market has been doing for the last month. Pullback, technically yesterday gapped down like crazy. When we look at it here, we're seeing the market gap down, crazy move yesterday, and then we just got bought back up. Today the market opened and it never stopped running higher. All right, so there are a few stocks that have pulled back to some critical levels, and I want to bring them to your attention because I personally like these setups right here right now. But in order for us to feel confident in taking these trades, we have to be in sync with the overall market direction, and we're gonna walk through it, see what is my actual thought process for the S&P, for the Nasdaq, Dow Jones, and the YM as well. All right, so let's start looking at the S&P 500, guys. This is critical. There's a lot of noise in the market right here right now. Right now, for the last month, technically the market hasn't really done anything. All right, we are still just up here, not going anywhere. We've been pulling back. We move back up, pull back again. But one thing is true in all of this is I'm seeing where this market just continues to hold is 50 exponential moving average. So as long as the S&P 500 continues to bounce off the 50 exponential moving average, I will continue to be a buyer at that level until we officially have a situation where the market just completely start taking out this uptrending support line, as well as taking out that 50 exponential moving average, which you can see basically last week the market came down very hard right to that level, bounce, came up, did nothing, and then pulled back again right to that level. Yesterday got bought up. Today there's a lot of buyers in the market as well. So what I'm looking for tomorrow, which is Friday, I need to see this market take out this level right here. If that ultimately happens, then this was just a pretty nice double bottom of the 50 exponential moving average, which would take the market right back, or the S&P 500 right back to its all-time high, 4,229. All right, so the trend is still intact. We just got to be cautious when we get back up to either a double top or up to the uptrending resistance level. But as it is right now, guys, I feel like the market is still healthy. It is still healthy. Nothing to be scared and sell everything and just run away. Though it's crazy in terms of the volatility, but we just have to look at the chart and see what exactly is the chart telling us, and then we use that as the tool to navigate the market, not so much what the news is saying, because for real, these guys are not really going to tell you exactly what they are doing. So they will lead you astray by telling you the opposite of what they're actually doing. So it's good to understand price action for yourself so that you can make your own decision based on your own intuition. All right, so guys, looking at NDX, one thing I can see for true, very true about NDX, this market is moving up in an uptrend as well. Where is the support for this market? Well, if we map a uptrending support line, we see that technically last week when Nasdaq pulled down hard, it came and kissed that level right around 13,000. We had a short-term bounce, right? Market pull up into the moving averages, and then we pull back down. And yesterday we got a very nice bounce. Today we got the continuation. And what was critical was we had a short-term downtrend line right here. Today officially the market was able to basically take that level out. So tomorrow I'm looking for this market to continue to its upside in terms of the Nasdaq, and if we do get that, then this is just gonna be a very nice and healthy situation. All right, let me see here. Okay, all right, so that's it for the Nasdaq, guys. I really like the Nasdaq. Dow Jones Industrial Average, this one here is not doing anything too interesting, but we can see that it keeps holding at an exponential moving average, which is the 50 as well. And as long as that market continues to do that, then the market is technically still intact. As long as it doesn't break down and close down below that support level, which is the level it always bounces. Look what happened yesterday. Market came right to that level and all the buyers came back in. Today, you know, we came up a little bit, nothing too crazy. So as far as the Dow goes, you know, we like to see the Dow break out of this level here, short term down, you know, move, boom, boom, pull back here. Is this going to be a W that take us back to the upside? That's what I'm looking forward to. All right, so just watch the Dow. You know, I like Nasdaq a little bit more. The pattern is more clear. Nasdaq has pulled back a lot more than the S&P 500 technically has, and it is bouncing off a support. So now we're going to look at a couple stocks that are also inside of the Nasdaq. And the first one that I technically have on the screen here is CRWD. And when we look at CrowdStrike, guys, we just got to zoom out on the chart and understand the story. What is the story that this stock is basically telling us? And when we say story, we mean what is the price action telling us? What is consistent about this price action? We can see that this thing is in an uptrend. Yes, very nice uptrend. Now our one job is to find the support level that this thing pulls back to and wait around to that support level to be a buyer. All right, so now when we look at this thing, we see that technically this thing has run up into what is called a symmetrical triangular pattern right here, right now. We also got a bounce off the support. So in the short term, I'm looking for CrowdStrike to come and try to take out this downtrending resistance line. And if we get that, then, you know, I'm looking for CrowdStrike to move up 19% to the upside, which would take it back into this uptrending resistance level, somewhere between 236 and 249. That's where I'll be looking to liquidate this trade. As it is right now, my risk level is if it actually breaks back down below this level here, then I no longer want to be in that trade. You can also be a bit sharper and said, you know, if this thing try to break back anywhere around here, you know, pull back and continue up. But if we get any form of major reversal like this, then we no longer like CrowdStrike, and, you know, we'll be shutting it down. But I'm long CrowdStrike. I'm looking for it to come to 220. If we take out that 220 level, then my second level is going to be up into the 236 level. Right, so use your trailing stop loss so that you can protect your downside and, you know, let this trade run, trail the profit up as this thing continues to work into your favor. Right, all right, the next one that I want to look at, guys, is BLNK. Now BLNK is a charging station company. So this is a electric EV cars play. One I'm looking at this thing here, this thing had a very nice run, pull back, pull back, pull back, pull back. So when we analyze this chart pattern, this is really a ascending triangular pattern, big picture. Price run up, pull back into a very nice triangular pattern. So typically with this pattern, we're looking for price to break out and continue moving to its upside. All right, so as it is right here, right now, I'm currently long BLNK. I like the setup. I'm looking for this thing to break out of this short-term resistance, and if we break out of the $32 level, then the first resistance level is going to be up to around 44. And if we come to 44 and take off 44, then I'm looking for BLNK to come back and test its all-time high. From where it's at right now, you know, to the all-time high, it's around 78% upside. All right, what's the risk? The risk is if it breaks back below or try to break below 25, then 25.80, then I would no longer, be looking to hold this, because it means that there is going to be significant downside, because technically there is no more support level until somewhere around $12. But fundamentally, what supports, what I'm seeing in the chart? Well, if you are following this company, you would know that they had earnings. I think they had earnings back on one of these days, and revenue is up over 300%. They did beat on the revenue. The company is growing, so this is a growth stock as it is right now, and I feel like this is just the best place to buy it. All right, right now we're seeing a short-term bull flag building right here. As long as we get that breakout, then the upside is way greater than the downside, and the downside is just from 32 to 25. So under 25, we're no longer long BLNK. All right, let's keep it going. Next stock that I'm bullish on, or this is a good place to take a swing trade on, is Apple. Why? Because when we look at Apple, big picture, this thing is still in a very nice uptrend, right? So boom, we are moving to the upside. Now that we understand that the stock is moving up, where is the low risk level to execute a swing trade? And a swing trade is a trade that you're looking to be in for a couple days to maybe a month or two, even 3 months as well, right? So when we look at this thing pulled back around the 200 somewhere back in March, and then we had a very nice run taking it back up into this resistance level. Now we pull back again, and if we look a little bit closer on the chart, this thing is kind of modeling the S&P a little bit. Pull back to the 200, bounce, pull back to the 200, bounce again. So basically we have a short-term W pattern right here right now on Apple. So I'm looking for this thing to continue moving to the upside from where it's at right now, 127 to the upside. It has around 8% upside. So technically going long right here with a stop loss basically right below the 200, around anything below 122.50. I think that's a good risk level. You'll be risking about around $5 to make $10 on the upside. So it's about 50-50, not so much. But Apple, long-term prospect, this is a solid company, guys. So I do like it right here right now. I'd continue adding to the position if you're already long right here at this level. Now the last one I want to look at, and this last one is actually AMD. Now without the moving averages on this chart, guys, we see that AMD just technically won't break down below this 74-72 level. We've seen it pull back here, got a nice run, and here we are, pull back to the same level, bounce here, pull back again, bounce, and now we are pulling back here, very, very solid base, and we are bouncing again. So I like this because I feel like the risk is low. This may be a longer term play. As long as it doesn't break back below 72.50, then I'd be long AMD and just continue to wait. Give it some time for it to break back up and come back somewhere up into this level. That's what I'm looking for. So technically, let's say the trade doesn't work out, we would actually lose around $6 if it breaks below 72.50. But if it work out, we're looking for this thing to go from 77 up to around 94, or potentially testing the all-time high, which is 97. That's 20-point upside. It's not gonna happen in a week. It may be 2 months for this thing to fully recover, because also when we start putting back these moving averages on there, we're seeing where this thing is basically below the 200. All right, we're seeing breakdown below the 200, but it basically just broke back above the 10 EMA, and that is a sign that in the short term, price wants to at least start coming back. So today it officially break back above the 10 and the 20 EMA. Worst case is we come back to the 200 and then fail and go back to the downside. So even from 77 to the 200, which is about 87 around, not 87 but 83, 200 is actually 84. So from 77, 84, that's about a 7 points upside. All right, so that's what I'm looking at in terms of this overall market. One more quick one that I want to point out is gold. So gold has been doing good, guys. Gold technically broke down, downtrend, came back down to this level. Old support, old resistance now becomes support. Double bottom here, and then we actually see where price break out of the downtrend and started to trend to the upside. So when we look at this, gold has basically retraced to its 50% level. All right, so let's line this up, and this is my Fibonacci retracement tool. All right, so when we look at this, guys, gold came right up, 50% retracement. So this entire breakdown, price retraced around 50% right now. So I want to be a little bit cautious on gold. Is this thing gonna pull back down just a little bit and then come back and test the 61.8 level, or is this going to be just a full recovery? What I'd say is scale down a little bit out of gold and get ready to be long some more stocks again. Don't liquidate all your gold. It's good to have some gold, but we may be setting up for a short-term pullback here before we continue moving back to the upside. All right, so guys, I hope you did find some value inside this video. If you did, hit that thumbs up, subscribe to the channel. I'll see you in the next video.